Welcome back. Here is your US market recap for Tuesday, May 19th, 2026. Today, Wall Street had a rough session driven by three major forces: surging Treasury yields, geopolitical tension with Iran, and a broad pullback in technology shares. Let us look at the numbers. The S&P 500 closed down 0.67% at 7,353. The Nasdaq Composite finished 0.84% lower at 25,870. And the Dow Jones Industrial Average shed 322 points, or 0.65%, to close at 49,363. This marks the S&P 500's third consecutive losing session. Now, what exactly dragged markets lower? The biggest story today was the bond market. The yield on the 30-year Treasury bond climbed to 5.18%, its highest level since 2007. This reignited fears that higher for longer interest rates are becoming a structural market problem. Rising Treasury yields increase borrowing costs, tighten financial conditions, and draw capital away from equities, posing a serious headwind for growth stocks. The second major driver was geopolitics. President Donald Trump delayed planned military strikes on Iran following requests from Gulf nations. Markets initially bounced, but that optimism faded as focus shifted back to macro pressures. With the White House rejecting parts of Iran's peace framework and Tehran holding its ground, this diplomatic stalemate continues to fuel market uncertainty. On oil, Brent crude fell nearly 1.8% to around $110 per barrel, while WTI traded around $108. Markets remain highly volatile because nearly 20% of global oil supply passes right through the Strait of Hormuz. Moving to earnings, Home Depot reported results this morning and managed to beat estimates. The company reaffirmed its full-year 2026 outlook, driven by steady demand for smaller do-it-yourself projects. They expect same-store sales growth of flat to up 2%. However, CFO Richard McPhail noted that customers are deferring larger projects due to affordability concerns and rising fuel costs. In the semiconductor space, a sector our viewers know well, AI infrastructure companies continued their correction after a massive rally earlier this month. Nvidia, Tesla, and Meta were all firmly lower today. All eyes are now on Nvidia's earnings report tomorrow. It is widely seen as the market's ultimate AI catalyst. But if bond yields keep climbing, Wall Street may face a bigger structural problem than any single earnings report can fix. One more major item. NextEra Energy announced a $67 billion acquisition of Dominion Energy, the largest deal ever in the power sector. This is a massive signal of where capital is flowing, straight into energy infrastructure to power the rapid expansion of AI data centers. So where does that leave us? The market is at a critical crossroads. Bond yields are at 19-year highs, oil remains above $100, and Nvidia earnings drop tomorrow night. The next 48 hours will be absolutely vital. That is your recap for May 19th. Stay focused. Thanks for watching.